Hello everyone, welcome back to the channel. Today we will be covering bill and hold arrangements under IFRS 15 in an easy to understand manner. Let's get started. Imagine this. You own a business that sells industrial machines. A customer places an order, you send them the invoice, but they ask you to hold on to the machine instead of delivering it right away. Maybe they don't have storage space or their factory is not ready to use it yet. This is called bill and hold arrangement. You bill the customer now, but they take possession later. The big question is, can you recognize this as revenue? Normally, revenue is recognized when control of the product transfers to the customer. That usually happens when the product is delivered or it is shipped to the customer. But in case of bill and hold arrangements, the product stays with the seller. So, how to decide if the customer actually controls the product? For revenue to be recognized in a bill and hold arrangement, there are four conditions that must be met. 1. Valid reason. The customer must have a real reason for delaying the delivery. Say, for instance, the customer has requested because it does not have space for the product. 2. Product is set aside. It should be clearly marked or stored separately for the customer. 3. Ready for delivery. Product must be complete and not require any more work. 4. No alternative use. You can't sell that product or use the product for someone else. If all these conditions are met, then the customer has control of the product even if it is still in your warehouse and you can recognize the revenue. Additionally, if you're storing the product for the customer, you might also be providing a custodial service. That means a part of the transaction price may need to be allocated for storage instead of just recognizing the full amount as product revenue. To wrap it up, bill and hold arrangements allow companies to recognize revenue before delivering a product, but only when the customer has true control over it. This is a perfect example of how revenue recognition is based on the principle of substance over form and not just by physical transfer of goods. If you've got any questions or thoughts on this topic, feel free to drop them in the comments below. Thanks for watching, and I will see you in the next video.